And I'm delighted to say that chairing this panel is someone who has both breadth and depth of expertise and knowledge. He's Kebby Sebastian, Managing Director of Pensa Consulting in the UK. It's a London-based consulting firm focused on the payments industry in Europe, the US, and also in Asia. Previously, he was responsible for global product development at Barclaycard, part of Barclays Bank, and held senior leadership roles with PayPal. So he has a huge amount of experience that he brings to this discussion. Kebby, come and join us on stage, and I'll leave you to introduce your panelists. Please welcome Kebby Sebastian. Thanks, Kebby.
Thank you. Thank you.
Thanks very much.
Thank you very much. Thank you, and thank you all for joining. This panel is about predicting the future of banking and payments. I want to kick it off by, no doubt there are a lot of technology solutions out there. One seems to come up, a new one every day. And so it'd be helpful to get the panel's perspective to start off on what, from your vantage point, are the consumer pain points that you think are most in need of solving from where you come in. So perhaps, Farhad, if I could start with you.
Yeah, thank you. I think to contextualize the issue, banking and payments to start with. Payments is a huge industry. The total value of payments worldwide is about $1.4 trillion, growing at about 15 to 20% year on year. The interesting thing is it makes up almost 35% of any global bank's revenue pool, right? The problem with the issue is banks do not command the future, right? This is the issue, because they're not in the leading position to drive customer experience and engagement, right? So if this is the opportunity at hand, growing at 15%, we've got to realize that within the payment space, you've got a whole bunch of technology companies seeking to come in. You've got a whole bunch of hardware manufacturers seeking to take a piece of the pie. And then, of course, you've got the telecoms seeking to get into the payment space as well. Just a few weeks back, we got an update on Apple, the company we've grown to love and admire. I mean, do we know that iTunes on Apple today has 800 million members with 800 million credit cards, going to move to 1 billion customer database very shortly, just on iTunes? Do we know that the iTunes business is the second most valuable business for Apple Inc. after its iPhone, generating almost $5 billion a quarter, right? Now, iTunes, along with iBeacon and iTouch, is very close to commanding the future of the payments business, right? It's got a phenomenal ecosystem, and it's got a phenomenal loyal customer base. So in my mind, the future is clear to see, but the future is challenged. And customers are evolving rapidly. They're using the web for a whole bunch of new reasons. 5 years ago, the web was used for contact. 3 years ago, the web was used for social connections. Today, it's the mobile web that is here and now. And banks quickly have got to figure out as to how the customer engages, experiences, and behaves with financial services, largely using mobile.
And what would be, I guess, I'll ask you, Paul, and then come to you, Constance, which is, you're the VocaLink, if you can actually provide a bit of context on VocaLink as well, but it is a traditional payment processing firm. Yep. Do you see it, the likes of more traditional banks and payment processing firms, to Farhad's point, being superseded by the likes of Apple and Google because they own the customer experience, and a bank just becomes relegated to the source of funds?
Well, I agree that mobile is the key driver that seems to be changing the nature of how we interact with our banks and payment systems. From our perspective, VocaLink provides infrastructure services to banks, to government, to central banks, etc. And so our challenges tend to be around meeting the demands of the consumer and businesses and the demands that they put on the infrastructure. So mobility is absolutely a key driver of those new demands. the convenience need of us as individuals, driven by the smartphone, high smartphone penetration, and the impact that places on the infrastructure is where we're seeing a lot of the investment. It's where our banks are asking us to make that investment. So I think from a consumer's perspective, there's a lot of pain around accessing your money, and it's quite complicated depending on which channel you're trying to do it through. And so from our perspective, we're trying to work with our banks to enable them to offer a more convenient service and access to their money in their accounts, but also the cost challenge as well. So for the other side of the transaction, we see businesses and merchants and banks and government struggling in certain circumstances with the cost of accessing those systems. And as technology changes, the costs tend to increase in the short term anyway. Yeah. So from our perspective, it's about cost, convenience, and giving consumers more control over their funds.
And to add into that question, I probably have the most controversial topic, which is Bitcoin. And we heard a little bit before from the previous panels about multi-challenge challenges, making sure you have a global presence. Well, these are all questions that come up in the context of cards and payments, because really you're looking at a legacy system which existed for centuries, really, which was not designed for the internet or for global commerce or for a global internet economy. So right now we have very few routes and institutions that allow you to hold, safeguard, spend, keep, and send money. And these kinds of traditional institutions weren't built for e-commerce, weren't built for mobile payments, weren't built for a global economy made up of diverse nation states. So if you think about how the internet really created a common platform where many different institutions could use the backbone of the internet to create a common channel for information, Bitcoin is that for money, is the platform for money. So what it does is it creates a common platform, a common channel using the backbone of the internet, which allows you to deploy and send and receive money seamlessly, instantaneously, and securely through local channels like banks, payment processors, and card networks. The Federal Reserve did a study a few years ago on payment channels, and what they concluded was, we don't need any more payment networks, we need a ubiquitous network. And Bitcoin is the ubiquitous network of money. So, we spoke a little bit about the challenges of mobile payments and how much of a market that is. So that includes both mobile payments for e-commerce and also includes remittances, for example, which is hundreds of billions, if not trillions, of money in global aid, including remittance, which people here know very well. So in terms of the pay points, Bitcoin was designed to be a secure payment protocol that allows you to seamlessly send and receive money no matter where you are in the world. That means no matter how big of a payment processor you are or a company, you can instantly flip a switch and start accepting Bitcoin for payments and have instantaneous settlement. So this is really a technology that enables anyone in the country to transact with anyone else in the world instantaneously, securely. And there are several companies and businesses and platforms being built on top of it.
And so just on that point, because about whether a new payment network is really required or not, it's going to be close to your heart, Paul. But as much as retailers may be irked by interchange from the payment networks, there is something to be said for real-time authorization, chargeback rights, ubiquitous acceptance. So, in your view, for Bitcoin, though, how does it address, or do you think it's just a question of time before it addresses?
Well, we're still.
Gaps?
You're right. So there are unique attributes of Bitcoin that make it very, very useful as a payment network. So, for example, merchants love Bitcoin because it allows you to take a payment and that payment is irreversible. That means as a merchant, you don't need to have all of these complicated mechanisms for validating identity. When you receive a payment in Bitcoin, because that payment is irreversible, you don't need to collect people's social security number or card network or anything like that. You can send those goods out the moment you receive the payment because that payment is good and secure the moment you receive it. Now, of course, users love having the reversibility because it gives them some flexibility. Now, users love Bitcoin for other reasons. That's because when you as a user want to buy, you look online, you find an e-commerce shop that has an item that you can't get in your country. In order to send the payment for that item, you need to send your card information, your bank information, a lot of personal identity. You need to trust that the merchant has PCI safeguards. You need to trust that merchant has adequate control so their employees aren't stealing customer data. You need to make sure that the IT systems are secure so that your data isn't stolen along that network. That's all so you can just receive a good from around the world. With Bitcoin, when you onboard to an exchange like us, your money is ultimately held at a bank. We KYC you, we know who you are, we have all your information, we do all the record-keeping reporting, but when you as a user go out into the world to buy goods and services, you don't need to send all your personal data around for anyone to intercept. So merchants love it because it reduces fees from 3 to 4% down to 1 or 0. Users love it because it preserves these e-commerce issues. And actually, you're talking about different players. Every player has some reason to enter this space, and that's why this market is exploding around the world. We're continually getting inquiries from banks and other hedge funds, other traders, other institutional entities wanting to take a position, because no matter where you are, if you're in value transfer, if you're in payments, Bitcoin is useful for you, and it's growing.
It'll be good to come to regulation also in a moment around Bitcoin, because that's obviously, or any payment system, a hot issue. But since we're on disruptive technology, Farhad and Paul, it'd be interesting to get your perspective on looking into the future. What technology is it that you think is going to be most disruptive, if any, for cards and payments? On one hand, is it mobile? Mobile, you could argue, has been 15 months away from being huge for the last 15 years, right? So what is it from your vantage point now, Farhad, probably you and then Paul, is going to make the difference?
I think at the core of the customer need is convenience, a wow experience, ubiquity, security. That is served to the customer in many different ways. The devices that could either be Android or iOS enabled, immaterial. The last mile connectivity to the merchant point of sale, whether it's NFC or Bluetooth or iBeacon, immaterial. I think at the core of the customer mindset is the fact that the smartphone is never more than 2 meters away from the individual, 24/7, right? The smartphone was used essentially earlier on for communications, then it was used for sociability, and finally now it's used largely for mobile commerce, right? So banks and financial institutions and companies like PayPal are adapting to a mobile-first strategy in really delivering tomorrow's solutions on the supercomputer which is in the palm of your hands, right? From a payments perspective, therefore, the experience that a customer has in terms of convenience and security is critical. From a consumer perspective, the experience a customer has in able to have ubiquity on the payment platform in a bid for him or her to engage with just about everyone within his social or business circle is critical, right? So the social connect of a payment solution is critical to its success going forward. And finally, I think the entire experience at what we call the point of sale is evolving hugely, and we normally don't talk about it because it's not cool to talk about and it's not mobile. But the point of sale is evolving significantly, and the experience customers today have at point of sale, largely mobile enabled, paperless, with reward redemption being an option, with cash on delivery becoming a thing of the past, and gadgets like Payward, which Mashreq has brought to the table, allowing a consummation, digital, paperless, on the phone. I think these are the wow factors that's really exciting a market like the UAE, where incidentally the smartphone incidence is the highest in the world.
I think the interesting bit for me comes around identity, and having spent my entire career in payments, it's actually about, can you identify somebody and do they have the rights to do whatever they want to do, whether it's cash, electronic, Bitcoin, anything else. And so if you think about identity and you think about mobile as a channel, that for me is where things are going to get very exciting. So when I can interact with anything, with any channel, physical, digital, and my identity can be verified within seconds to 100% accuracy, then I don't need any other form of token, card, mobile device, etc. Because the payment transaction can happen seamlessly behind the scenes once my identity has been confirmed. So, whilst we've got real-time clearing in the market now around the world in several markets, we've brought mobile solutions out in the UK and are also looking to do that in 1 or 2 other markets. Where I've got some of my product development guys focused at the moment is on the whole identity and authentication space, which also brings up the data topic. But that for me is the real exciting disruptive technology that's going to change the way we make transactions in 10 years' time.
Interesting. And it'll be good to speak about, talk a bit about this market in the Middle East and what you see is most applicable for this market. You talked about identity. Of course, you mentioned there's a lot of Bitcoin acceptance taking place, cash on delivery, Farhad. But perhaps, Farhad, given you're a bank, could you speak about what sort of initiatives you have in your mind of what you think is, particularly attractive or valuable for this market dynamic?
Sure. This is a fascinating market. It's growing exponentially. Maybe 8.5, 9 million people at this point in time. My sense is it'll grow to about 20 million people by the time the expo arrives, right? It's also a quality mix. Very white-collared, educated, fairly high income, very tech-savvy, right? Very amenable to innovation. Huge early adapter experience and successful at that. So you look at that piece and you overlay it with what's happening in the digital and mobile world, right? The Internet of Things, everything's getting connected. The wearable elements that are happening today, the big data pieces, the use of mobile health coming into this part of the world as a big agenda, and of course electric cars and energy conservation, etc., etc. So banking and payments has a very exciting opportunity in that context, in being able to wow customers with solutions that pan across various industries, mobile, telecoms, as well as banking. The fascinating thing about the UAE is that the government is the biggest and most capable partner in the evolution of things. And the smart country, smart government, smart initiatives, I think is like no other market that I've seen. It really helps propagate this hugely. So specific to your question, I think in the next 3 to 5 years, you're going to see a significant rollout amongst the 30 banks that operate in the retail space and 51 banks that operate in the UAE, largely on mobile commerce, largely on point of sale evolution, and basically back end and back office operations moving to the cloud vis-a-vis data warehouse as we see presently.
Interesting. And
so actually Dubai is a perfect place for Bitcoin adoption. If you look at where Bitcoin is growing rapidly around the world, so I go around speaking with different banks and different regulators and making sure that everyone understands the technology, that the opportunities are there. The countries that are moving quickest right now are the ones that are much like Dubai, that are tech savvy, highly educated, innovative. They understand capital markets. A small country can move much quicker than a bigger country. So a bigger country like the United States, they're very anxious to make sure they're a leader in this new technology, just like the internet. But they have to have a lot of stakeholders. It takes a lot of time to push regulations through 50 states. So it's really the smaller countries like the UK, Singapore, Luxembourg, Hong Kong, the financial centers of the world that are acting the quickest and where adoption is growing the most rapidly. So what Bitcoin enables you to do is any country that finds residence in Dubai Any e-commerce retailer that makes a big splash in this technology, they have the ability to funnel all the liquidity of the market into this country. So no matter how big your country is, if you are growing innovation with Bitcoin companies, you're servicing customers from all around the world from this hub. So Dubai actually is a perfect opportunity for local banks, payment processors, institutional entities to enter this space and quickly become a leader. Dubai also has a really large remittance market. So Bitcoin has huge, huge implications for remittance. Yeah. Right now it's $560 billion. That's just the money that migrant workers send home. There's another $500 billion in global aid passed between countries in the same remittance market. So we're really talking over $1 trillion. And here there are a ton of migrant workers. Right now in this region, they charge upwards 25% of every $100 that a migrant worker sends home. In the poorest countries, that represents almost 40%, half of their entire GDP of those countries are those little $100 bills that people send back home. So here, there's a huge class. If these people were able to keep a little bit more of their hard-earned money, that would be working capital that goes into Dubai, that goes into this economy, that empowers people who are now entering the global financial economy for the first time. You know, we talk a lot about mobile payments, for example. There are people all around the world, billions of people that will be coming online to the world for the first time in the entire world. How they're going to access the financial markets are going to be through their mobile phones. And they're going to be doing it through platforms like Kraken and like others, including banks. So Dubai has a huge, huge opportunity to become a leader, just like many of these other smaller countries that are finding niches as financial center hubs.
Okay, and I'll ask you, Paul, but just to mention, sure. I will open it up for questions right after.
It's as much about leadership for me as it is about anything else. Having a vision and leading the delivery against that vision is probably the most important thing. I mean, there are lots of fantastic ideas out there, but having the courage to state what that vision is and then execute on that plan is, I think, the most important aspect. And you see markets that struggle with legacy technology, but actually I think that's an excuse for a lack of clear leadership. And actually in that execution as well, I don't think it matters whether it's not perfect, because it's about out-innovating or out-executing on that plan, and that's how you build that competitive advantage. So I think the region has a lot of those characteristics, coupled with great, high smartphone penetration and appetite for innovation, and as a consequence, look where it's come in the last 30 years.
And outside of your own companies, if you look sort of at a global perspective, what are the companies that you would point to as most likely to disrupt payments in the future?
Don't come to me first.
Okay. So you mentioned,
my unbiased opinion, it's Mashreq.
Yes.
No,
yes.
seriously.
Second to Mashreq.
The team's been doing some wonderful things, and folks out here who've come in from outside the UAE, just go across and take a look at one of our EQ branches, where we've actually invested in Microsoft 7 engagement enablement software to allow customers to gamify their entire experience with the bank.
Yes.
Touchscreens, simulations, gestures, etc. Plus, again, the entire tap-and-go functionality we have on our credit cards, and Payward functionality as well. But look, the disruptors globally, I mean, for all to see, Apple is at the forefront and succeeding at that. PayPal is a 100-pound gorilla that has 147 million customers, and that legacy and loyalty is not going to go away in a hurry. And they're innovating big time with what's it called, biometrics as such. The entire wow and cool experience at point of sale is only exponentially increasing. Then of course you've got the mobile companies and the telecoms that are trying to get into that space as well. And of course Square has revolutionized the entire mobile phone as a device to accept all forms of plastic. But the point to make is, hey, the credit card in our wallets, it's 70 years old. It was introduced in the 1950s. Why do we still use it, right?
Exactly.
And that's a moot question to your point in terms of legacy investments.
Absolutely.
Any questions on the floor? If they do, we'll come to you. And while we come to that,
Sure.
Paul, your
Well, I mean,
thoughts?
I'm loving watching the Bitcoin story.
Yes.
I mean, I think that's definitely something that everyone's watching and is a disruptive play. And Ripple and the other guys that are operating in and around the space. I come back to, there are lots of companies doing things well and doing interesting things. But I don't think there are that many real disruptors out there. The retailers, and I include, you know, Apple to some extent and Amazon and so on in that story, they're very customer focused, and that's great to see, and that's where a lot of that innovation comes from. But I think you've got some interesting stories at a country level as well, and so for me there's a lot of exciting things, but there's not actually that many disruptors out there.
Yep. So we'll just take the question on the floor. Go ahead.
Mahmoud Qasim from the National Newspaper. I have a question for Mr. Irani.
Could you hold it a bit closer?
Can you hear that better
Yeah.
now?
Yeah.
Okay. Mahmoud Qasim, reporter with the National Newspaper in Abu Dhabi. I'm interested about your elaborations on how banks are becoming more digital, spending more money on mobile payments, etc. But the fact is, as you alluded to, the country has over 51 banks, yet still payments are quite cumbersome with credit cards. You know, I have a Payward on my card, yet I can never find anyone who really accepts that, and I've got to put in my PIN, etc. So I know Mashreq has been especially in the forefront of technological innovation, but what, you know, as the competition for retail customers heats up in this country, what are you really doing to make that experience more convenient to customers? If you could elaborate on some of the things that you say in the next 3 years will come out that will make you as a bank stand out and the industry as a whole keep its you know, revenues coming in, etc.
Right. It's an excellent question. Thank you. There's a whole bunch of retail banks out there that have enlightened management with excellent experience that are really driving hard in. Thank you so much. So as I was saying, there's a number of banks out there with very good management teams, enlightened in a bid to deliver, you know, retail banking 2.0 in the UAE, if I were to frame it that way. Individual banks like Mashreq, ENBD, ADCB, ADIB, RAC, and a whole bunch of others, they're investing big time into the mobile platform, applications, experiences. They are building applications to help with online redemptions of rewards. They're building capabilities to allow you to find value in brick and mortar using an application that goes out and seeks to find discounts, value adds at restaurants, theme parks, etc., with GeoSat enabled guidance systems on the app itself. Now, all that's great, and while the private sector and the banks drive this innovation in a bid to grow experience and a higher loyalty, banks alone, if working without the concert of the authorities and the ecosystem, will fail, right? The great news about the UAE is that this government that runs this place is more enterprising than the financial institutions. And I give you some examples, right? As we speak, we are in the final stages of creating a unified payment gateway solution for the UAE, which will allow all debit cards, credit cards, ATMs, and POS, as well as e-commerce transactions, to be settled on one unified platform, bringing economies of scale to the value chain that hopefully one day will offset itself in terms of the fees and the benefits that end consumers get. Number two, a huge credit bureau enterprise has just gone live this month, and that will allow financial institutions and individuals and small corporations to engage with the industry with more confidence and in a more robust manner. Number three, we've just launched the UAE direct debit system, for example, that lends towards significant convenience in terms of standing instructions, etc. The Association of UAE Banks, the UAE Banking Federation, has sponsored the creation of an M-wallet that will be owned by the banks. and that will make itself visible in the fourth quarter this year, which will allow individuals and banks to adapt the wallet and to use this ubiquitously online and physically anywhere in the UAE at an interchange level and a merchant discount level and a value chain level that is far better than the existing legacy system. So a whole bunch of enterprise, both government and private, is driving towards rendering an ecosystem which will be conducive to a better experience. Call centers are being enhanced across the board. High tide has come into the UAE. Bank profitability has grown by anywhere to 15 to 25%. You'll be amazed with the amount of investment going back into technology at this point in time. I'm pretty bullish about this part of the world. If there's one market that's really investing for the future, it's the UAE.
Very interesting. And we are almost out of time, but we are out of time, but one last question we'll take over here if we can.
Yeah, it's on. Hi, I'm Asad Batla.
Yes.
My question could be answered by Farhad from the bank or from a payment related to the ecosystem. Is it because traditionally in the past world we had an acquiring banking business where salespeople used to go and actually enroll merchants, and we used to have 100,000 merchants, and then the equation got completed. I had a card, I had a merchant, and we used to go and pay. Now, Farhad, you mentioned really innovative ways that the government and banks and institutions are coming together to round up the ecosystem. But is it the entrepreneurial ventures that are missing, or is it the economics around doing an online merchant acquiring that is not? Because a merchant opens up, he today doesn't have the same way a salesman visiting. He has to find through the through the web of ways to pay, WorldPay, PayPal, which one to choose, bank. He gets confused. The small merchant gets confused. So the ecosystem is not getting completed because of education, economics, will from the bank, because it becomes too expensive to send everywhere, or marketing. So
what keeps the ecosystem from
ecosystem is not getting completed. Can anybody tackle?
So Paul, maybe we'll ask you to take that. What keeps the ecosystem from taking off?
I think we have to remember that. Most of us are here because we enjoy the technology. But we do overcomplicate things. I think there's no doubt in my mind that a merchant is just really interested in taking money. It doesn't really matter what kind of money it is, as long as he can accept it. So, there are lots of people vying for that interface, and the more simple, the more cost-effective that can be, then I think the merchant is facing a breadth of opportunities that are going to become more simpler for them to take those payments. But also the payment themselves. So I'll let Constance say, but if you can keep the payment itself quite simple, then that will also help.
Yeah. Constance,
Yes. So as we partner with banks, to my great surprise, I learned the hard way how slow banks can be to change entire infrastructure. So for example, I'll give you an example. We'll hook up with a bank. Our technological capabilities, our infrastructure is actually better than the banks. We need to work with the banks to develop their API. And then we have to deal with that particular bank's bank network, so corresponding bank network. So even if we have international customers sending money to our bank account with our bank, that bank still has limitations in whatever their correspondent bank network is, and whoever their payment processors are, and what their technological capabilities are on the back end. So the problem really is the ubiquitousness of technology and networks. Right now, you have banks, you have payment processors, you have identity verifiers, you have technology layers on top of that, and you have to navigate this very complicated world, make sure you pick the market winner in each one, and deal with the limitations of each network as you hook up with a different processor, a different bank. And so I'm very encouraged to hear about Mashreq, learning about having an instantaneous settlement system just in the UAE. But if you look at what we really need is an instantaneous settlement all around the world, because we're really looking at a global economy for the first time. And we're working with cards and brick and mortar institutions that were made for local currencies, point of sale devices where you could check a face and ID. And all of these things are being imported onto the online world, and it's a very large, cumbersome machine that doesn't sometimes make sense for what we really need to do, which is send and receive money securely and validate identity around the world. So if you're talking about, why is it so hard? We're really doing a paradigm shift between a brick and mortar legacy world to an online, distributed, decentralized internet world. Right now, when you send a payment, even though you get your check direct deposited, you spend your credit card at the point of sale, you never touch cash. But on the back end, you have all of these piles of cash going through all these different networks and validating identities in between. It's a completely inefficient system. So we're moving away from this old world into a new world, and it's going to be very, very interesting to see what remains here at the end.
That's a great note to end on. Clearly there is no more exciting time to be in the cards and payment space, and it sounds like the Middle East is actually, because of a combination of factors, government, concentrated markets, one of the most exciting places to be in. So ladies and gentlemen, please join me in thanking our panel, Farhad Irani, Constance, Choi, Paul Stoddart. Thank you very much.